Hello and welcome back to Money Moves Daily, your Gulf Report. It's Friday, September 5th. I'm Sophia Reyes.
And I'm Jason Miller. Sophia, it feels like the energy markets are keeping us on our toes this week. Brent crude is dipping again, trading closer to $66 a barrel after OPEC Plus announced production increases. The Tadawul is holding steady, up slightly yesterday, while the Qatar exchange saw a modest dip.
Precisely, Jason. We'll be diving deep into that OPEC Plus decision and what it means for global oil supply and prices. But we also have a fascinating story out of the sovereign wealth fund landscape, with Mubadala in the UAE making some significant global moves that are reshaping the investment hierarchy in the Gulf.
Plus, we've got some rapid-fire news for our quick hit segment, including a telecom giant in the UAE posting massive profits and a major Saudi chemical company navigating a challenging market. And later, we'll tell you why everyone is already looking ahead to the next OPEC Plus meeting. So let's get into it.
All right, Jason, let's start with the big one, oil. Just last week, on August 3rd, OPEC Plus decided to increase oil production by 547,000 barrels per day for September 2025. This is part of a larger plan to unwind the voluntary cuts that began earlier this year.
Okay, so they're putting more oil into the market. My immediate thought is, won't that just drive prices down further? Brent crude is already down to around $66 a barrel today, after falling over 2% right after that announcement earlier in August. Is this a sign of weakening demand, or is OPEC Plus signaling something else?
It's a calculated move, Jason. The group stated the increase is based on a steady global economic outlook and healthy market fundamentals. They're trying to regain market share and, importantly, accelerate compensation for any overproduced volumes from earlier in 2024. But you're right, the market reaction has been cautious. The immediate dip suggests that some investors are wary of an oversupplied market, especially with global growth concerns looming.
So it's a balancing act. They want to show stability and meet demand, but they also don't want to crash the price. And for the average person, this means potentially cheaper gas at the pump, which is always good news, right?
In theory, yes. Lower crude prices generally translate to lower fuel costs, which can be a relief for consumers and a boost for many industries. But the flexibility clause in the OPEC Plus agreement, stating that increases can be paused or reversed subject to evolving market conditions, means we need to watch this closely. Geopolitics, global demand, and non-OPEC Plus supply can shift quickly.
Speaking of shifts, let's talk about sovereign wealth funds, because there's been a pretty significant change at the top, which might surprise some of our listeners. For a while now, we've focused on Saudi Arabia's PIF and its massive giga-projects, but I'm seeing reports that Abu Dhabi's Mubadala actually deployed more capital in 2024 than the PIF, becoming the leading sovereign investor globally. What's going on there?
That's right, Jason. It's a notable development. While the PIF remains a colossus, Mubadala deployed an impressive $29.2 billion across 52 deals in 2024, a 67% increase from the previous year. In contrast, the PIF's investments declined by 37% to $19.9 billion. This doesn't mean the PIF is slowing down its ambition for Vision 2030, but it highlights different strategic approaches.
So what's the difference in their strategy? Are they investing in different things or just in different places? Because when I hear PIF, I think Neom, Qiddiya, Riyadh Air, these massive domestic projects transforming Saudi Arabia.
Exactly. The PIF strategy is heavily weighted towards domestic investment, with over 60% of its capital going into Saudi-based projects, particularly the Giga projects driving Vision 2030, and aiming for $70 billion in annual domestic spending by 2025. Mubadala, on the other hand, is a more globally diversified investor. A significant 85% of its capital in 2024 went into developed markets, with 57% in the U.S. and only 5% deployed within the UAE. Their focus is on sectors like AI, technology, financial services, life sciences, and healthcare worldwide.
That's a stark contrast. So Mubadala is really looking outwards, building a diversified international portfolio, while PIF is doubling down on transforming Saudi Arabia from within. Both are massive, but with different playbooks. It really illustrates the distinct economic diversification paths each nation is taking.
Absolutely. Both are powerhouses, but their methods are tailored to their specific national goals and timelines.
Let's move to our quick hits for a rapid overview of other key developments across the Gulf. Sophia, what's catching your eye?
First up, ENT, the UAE telecom giant, announced a massive 129.9% jump in profit to $1.5 billion in early 2025. That's an extraordinary performance, demonstrating the strength of the region's digital infrastructure and services sector.
Wow, that's a huge leap. Clearly, connectivity and digital transformation are paying off big time for them. What else?
Next, we're looking at SABIC, the Saudi petrochemical giant. They reported losses of nearly 5 billion Saudi rial, or $1.33 billion in the first half of 2025, as they navigate a challenging market with overcapacity and volatile prices. However, despite these headwinds, they've rejoined Forbes' top 100 listed companies, largely due to a rebound in profits in 2024.
It sounds like SABIC is on a tough road, but they're clearly fighting to stay relevant in a very competitive global chemicals market. It's a reminder that even the biggest players aren't immune to market pressures.
Indeed. And on a more forward-looking note for the UAE, the nation is spearheading a new trade bloc focused on trade openness and international trade rules with other small and medium-sized WTO members. This initiative aims to strengthen global trade partnerships and is expected to launch virtually in November with an in-person event next July.
That's an interesting move. The UAE clearly wants to carve out a leadership role in shaping future trade dynamics. And finally, any notable real estate news?
Yes, Dubai Investments has just signed a significant deal with Angola's sovereign wealth fund to develop real estate in Luanda. This highlights the growing outward investment by UAE firms taking their expertise to new emerging markets.
A very strategic move, expanding their footprint globally. All right, Sophia, as we wrap up, what should our listeners be keeping a close eye on in the next 24 to 48 hours?
Forward-looking, all eyes will be back on OPEC+. Their next meeting is scheduled for September 7th, where they will decide on oil production levels for October. Given the current market volatility and the recent September output hike, this decision will be critical.
So, more clarity on whether prices will stabilize or continue their slide. The market will be hanging on every word. It's always fascinating to see how these decisions from the Gulf reverberate across the global economy.
Absolutely. The region's influence on global energy, finance, and investment continues to grow and evolve at an incredible pace.
That's all the time we have for today's Money Moves Daily, the Gulf Report. A huge thank you to Sophia Reyes for her sharp insights.
And thank you, Jason, for those insightful questions.
Make sure to subscribe wherever you get your podcasts so you never miss an episode. We'll be back next time with more crucial updates on the financial pulse of the Middle East. Until then, keep an eye on those money moves.